Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the economy in the United Kingdom because the latest data has just been released for gross domestic product, and unfortunately, it shows that the UK has completely flatlined in July. It didn't achieve any growth whatsoever in gross domestic product. And this is obviously a major problem for the UK government because if you've been following the channel, you'll know that the deficit has been growing since Labour took power in July 2024. And that means that the UK is now having to borrow more money to fund that deficit because it's spending more than it's earning. And that borrowing is becoming increasingly more expensive as the bond markets fall and yields rise. So let's get into the details as to what's happened in July. You can see from this chart, which shows the month-on-month movement in gross domestic product over the last 12 months. As we just said, the latest figure for July has come in at 0% growth, so nothing. And if we look at what's been happening over the past few months, you can see that in April and May of 25, the GDP actually fell by 0.1%. We then saw a bounce back in June when it increased by 0.4%. And it was hoped that this was the UK turning the corner and would start seeing some serious growth again. However, unfortunately, those hopes have been dashed with this 0% performance in the month. And the reason why this is a problem is because earning more GDP would be one of the ways that the UK could solve its debt problem by earning more money. Then obviously you don't need to borrow as much. You put it into your own circumstances. If you can get a better job, if you can get more pay, if you can get more hours, whatever it might be, then it helps you to be able to fund everything and you don't need to use your credit cards or take a loan. Just before we go on any further today, can I ask anybody that hasn't subscribed yet to please smash that subscriber button now? It doesn't cost you anything. It's not really a subscription, but it helps me with the algorithm and also puts a smile on my face. So please do that and let's get back to the video. And if you have a look at what's been happening with GDP over the past 3 years, this is the quarterly figures that are published by the government. You can see the problem that at the start of 2024, things started to get better. And by the end of the year, we had 4 consecutive quarters of growing GDP. So that looked like the UK was on the path to long-term growth. However, you can see that in the first quarter of 25, that trend reversed when we saw a slowdown in the growth. And then in the second quarter, that slowdown has continued. And what we've seen from the July figures is that it looks like the third quarter is going to be worse still if the UK carries on as it is. So we're seeing this slowdown in GDP, which is only going to add further to the deficit that the UK has and mean that it's going to have to borrow more money. Now, I thought it was worth having a look at the breakdown as to what's going on in the UK, which sectors are doing well and which sectors are not doing so well. And this chart, which has been put together using data from the Office of National Statistics, shows the situation dating back to July 2024, which was when Labour took over as the governing party in the UK. And we've got different colour coding here. The black line shows the movement in GDP. Now, this is on a 3-month basis, so we're looking at quarterly numbers here rather than just the monthly figures. And we've got then a breakdown of 3 different colours on the bar charts. We've got the contribution from construction sector, which is shown in yellow. The pink section is the contribution from the services sector, and the blue section is the contribution from manufacturing production. And if we look at the latest figures for July 2025, we can see that there's some really interesting performance. The 0 line here shows no growth, and obviously then we've got some positive growth up to 1% at the top and negative -0.5 at the bottom. So what you can see is that in the month of July, for the past 3 months, the services sector has been the biggest single contributor. It's grown by roughly around 0.3%. We've then had some growth from the construction sector, and that's been partially offset by what's happening in production, manufacturing, businesses, basically. And one of the problems that businesses have faced since Labour came in was that we had the budget in October of 24, and that budget introduced some increases in national insurance, which was basically a way of taxing the UK without announcing any increases in taxes. So, national insurance is a contribution that's made to the state for basically pensions and all of those sorts of things. And it was increased significantly for a lot of businesses. And that's caused many businesses to struggle and actually has led to some of them laying off staff because they haven't been able to keep affording the same number of staff. So, what we're seeing is that manufacturing and production is in decline, and that's being partially offset by services. Now, as I said, this bar chart here is the 3-month picture. If we were looking at the 1-month picture, then we would have basically the increase in services and construction would be completely offset by what's happening in manufacturing. It's interesting to see what's happening with GDP. You can see that when Labour took over, there was positive growth in July. We then had a long period of no growth through to November. Between December and April, we saw positive movements. It was increasing GDP. However, since April, we've got this declining situation. And that's obviously a concern because if it continues, if that trend carries on, then that black line will actually go below zero at some point over the next few months. And obviously, that would be very bad news. Now, I thought it was worth having a look at what's been going on in these three sectors since Labour took over in July 24. So we've got the three different coloured lines here. The blue one is manufacturing, the pink one is services, and the yellow one construction, and then the black one is GDP again. And so you can see that there's been moderate slow growth in GDP since the summer of 24, but it's a completely different story for the three sectors. The most successful sector that over the last year or so has been services. So it's seen some growth, and we've just gone through the details as to what's going on in services. Construction has been a mixed pattern. So initially we saw a fall in the levels of construction. That's starting to improve a little bit in 2025, but it's still relatively low. And if we look at what's happened with manufacturing, you can see that it hasn't performed well at all over the last 12 months. Most of the months have seen negative performance in terms of the growth in manufacturing. And if we look at what's happened in 2025, you can see that it's significantly downward. And since April, we've got a sharp turn in the level of growth in manufacturing. And that's partly because of the new taxes and the national insurance that came in. And this is obviously a worry because if the UK is going to lose all of its manufacturing growth, then it needs the services sector and possibly construction to start growing more rapidly to try to balance off the overall GDP impact. And that's not happening. When you look at the growth in services and construction, it's relatively shallow, but the fall in manufacturing looks like it's going to be quite steep. So this is a major concern for industry in the UK as well as GDP and what's going on with the budget. Now, in terms of what happened with imports and exports in the month, this chart shows the movement in exports over the last 12 months. And you can see that in July, there was an improved position compared to the situation in June. And the UK exported just over $76 billion worth of goods. So that's a pretty healthy number. It looks quite good. It's the second highest in the last 12 months. So overall, the trend in 2025 is generally upwards, relatively shallow growth, but we're seeing £76 billion worth of goods exported. How does that compare to the imports? Well, you can see from the imports chart, the scale is slightly higher. So it's a similar pattern. The shape of this chart looks very similar. And what we saw in July was an increase in imports to 81.7 billion. So that meant that the UK is importing more than it's exporting. And in fact, if we compare these two charts, you can see that that's been the situation consistently. And in the month of July, the net deficit between imports and exports was £5.26 billion. So the UK spent over £5 billion more than it made from its exports. So that means that the UK has a negative balance of trade. And this chart shows the movement in the balance of trade over the last 12 months. What this shows us is that for the last 10 months, the UK has been in a negative situation. So it's been importing more than it's exporting. Therefore, it's a net importer It's spending more than it's earning, and that's one of the problems that the government is facing, because if you're spending more than you're earning, how do you fill that gap? It's through debt. And debt for the government is the issuance of bonds, and we'll go on to look at that in a moment. And you can see here that the deficit is actually increasing over the last couple of months. Since May, we've seen June and July, the deficit is getting larger. So this adds further to the problems that the UK government have. Not only is GDP not growing, it's flatlined in July, but it's actually, we've got a negative balance of trade, so we're spending more than we're earning. So all of that means the UK is likely to have to borrow more. Now, I thought it was worth expanding this chart to show the situation over the last 3 years, because every time I make a video on the UK, somebody will message me saying, this is all the previous government's fault. Labour's doing a great job. They're just having to pick up the pieces from the broken Britain that was left behind by the Conservative Party when they took over. So I wanted to get into the breakdown of that. So this shows the balance of trade over the last 3 years. And you can see from the zero line that the UK has consistently been below the zero line. So it has actually been running a negative balance of trade for a long time. But I wanted to look at what's been happening since Labour took over in the middle of 2024. And you can see that at that point, the balance of trade was negative. There was a bounce back in the fall of 2024. However, that was quickly reversed. And since that time, we have seen the UK sitting deeply in negative territory in terms of the balance of trade. And if you take a step back, well, I think the situation from 2024 onwards actually looks worse than the situation before that. So I don't think this was a position whereby the government has picked up something that was disastrous and are now improving it. I think it's actually getting worse, but you can make your own view from the shape of this chart. Now, what does that mean for UK cash and its current account and borrowing? Well, this chart shows the UK's current account over the last 3 years, and you can see that it's been firmly in the negative. There has actually only been one quarter when the UK had a positive balance on its current account. That was in 2022, and that was partly down to what was happening at that time with the Ukraine situation and lots of weird things happening with trade. But consistently, the UK government has been running a negative position on its current account, and that's one of the reasons why the debt figure is so high and why borrowing is increasing all the time, because it doesn't have any money to fund its expenditure. And I thought it was worth having a look at this chart, which shows the level of business investment in the UK over the past 3 years. And this is cause for concern, because we've talked about the fact that manufacturing is in decline. It's not producing positive growth in GDP at the moment. And so the way to get around that would obviously be to invest into British industry, to try to build it up, to try to improve its situation, sell more, make more money, make more profit, get some more GDP. But as you can see, the latest data shows that in the previous quarter, investment into UK business actually fell by 4%. And that was compared with the previous quarter, whereby there was an increase of 3.9%. So that fall has more than offset all of the investment that was made in the first quarter. And if we look at the final quarter of 2024, there was also a fall of 2%. So over the last 3 quarters, we have seen falling investment into business in the UK. And clearly, that's not going to help the situation. That's not going to improve what's going on with manufacturing and help turn things around. So that is a very big cause for concern. Now, what's going on in the UK economy? Well, at the moment, inflation is continuing to increase. You can see the chart here, which shows the last 12 months. 12 months ago in July 24, inflation was sitting at 2.2%, which was just above the target rate of 2% set by the Bank of England. It sat at or around that level for the rest of 2024. However, in 2025, we've seen inflation starting to take off again. And the most recent data for July shows that it's sitting at 3.8%. So that's almost double the target rate of 2%. And this is a problem because ordinarily, the Bank of England would be cutting interest rates given the fact that GDP is not growing. It would want to boost the economy to try to stimulate growth. Therefore, reducing interest rates reduces the cost of borrowing, helps people and helps encourage businesses and individuals taking on more debt. They will increase their spending and that will increase GDP. But the Bank of England is very worried about inflation. So the fact that inflation is almost double where it wants it to be and it's still rising means that the Bank of England is reluctant to cut rates. And the governor recently said that he doesn't think that there will be a rate cut in the near future. And that's a problem for the UK because you need to cut rates to stimulate growth. So the UK is rapidly heading to a situation of stagflation, stagnant economy with inflation. And that's difficult to solve and also not good for the growth and will mean that the UK government will have to borrow more debt. And as we've talked about before, the cost of that debt is rising rapidly. This chart shows the movement in the 30-year bond yield over the last 10 years. And you can see that the current level of 5.5% is the highest that it's been at any time in that period. So that's obviously bad news because it's going to cost more to borrow more money. But it also means that as all of these older bonds come up for maturity and have to be replaced with new bonds, it's going to increase the total debt burden and the cost of all of the debt to the UK government. So the UK is facing a double whammy right now. The debt is going up because it's not making enough GDP, not making enough earnings. And the price of that debt, the cost, the monthly outlay is also increasing, which means that it's going to have less cash because it'll have to fund all of those coupons. And this really becomes a vicious circle quite quickly. So what's the summary and conclusion today? Well, I wanted to post this video because we've been talking about what's been happening in the UK and you've been telling me that you'd like to hear more about the UK, you'd like to hear latest updates. So I wanted to post this video as soon as I found out about what was happening with GDP in July. And as we've talked about in this video, July was a complete nightmare from the UK government's point of view. They were hoping for some significant growth to start building up some cash to try to fund some of the deficit that's building up at the moment. But as we've seen, July was a complete flat line. There was no growth whatsoever. It was 0%. Now, the details of that, there was obviously some growth in services and construction. However, all of that growth was offset by a fall in manufacturing. And the problem that the UK has is that if its manufacturing is now going into long-term decline, if it's going to see month-on-month falls, then that will mean that there'll be less jobs available, less people employed, and therefore the multiplier effect of that, the negative multiplier, will be very damaging because people won't have enough money, they won't be spending in their local economy, therefore they don't go and put money in the tills, those shops and businesses don't get the earnings, so they're not able to hire people and pay their staff who can then go and spend more money. So this becomes quite damaging quite quickly. And the blue collar sector in the UK is still a very important part of the economy. So the UK really needs to look after its manufacturing. But as we saw, investment in business is actually in decline at the moment. So there's nothing that's on the horizon that's going to turn everything around. And as we've also talked about, the UK government is in a problem situation because the UK is a net importer. So it's spending more on imports than it's earning from its exports. And the problem we have is that if you don't boost your manufacturing and produce more things, then that situation is likely to get worse. You'll be selling less things overseas, and therefore the imports continue to rise while the exports continue to decline. And all of this means that the UK is likely to face a bigger deficit through the end of 2025. It'll have to borrow more money. And that debt is becoming more expensive because bond yields are continuing to go up. So new debt will cost more, and also refinancing all of the existing bonds will also cost more, maybe 2 or 3 or 4 times more than the historic cost. And all of this is adding up to major headaches for the UK government. They're going to have to find more money. They're going to have to find more funding to continue spending. And the only realistic way of doing that at the moment is by increasing taxes. But increasing taxes, as the government has seen, can have a negative impact on business. If it's costing them more money to employ people, then they may decide not to do that, to cut back on jobs. That's one of the problems that's happening in manufacturing at the moment. And so if taxes do go up further, that could actually cause an acceleration in the decline of GDP. So the overall summary of today's video is that the UK is in a very difficult situation at the moment. That situation is getting worse. We've seen no growth in GDP in July. If that continues for the rest of 2025, then the deficit will be getting bigger. Rachel Reeves, the Chancellor of the Exchequer, already has a 35 billion black hole to try to fill in that budget, and it could be significantly more than that by the time she comes around to announcing what tax changes there are at the end of November. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and please subscribe if you haven't done so already. Thank you to everybody that's supporting me. If you bought me a coffee, sent me a YouTube super thanks, or signed up as a Patreon, YouTube member, or buy me a coffee member, thank you for that support. And here's something to put a smile on your face.